Yo, what's going on, guys? Super excited to be here with you guys today with another breakdown of a trade that we had taken this morning coming into New York session. If you guys were trading today, it was a CPI announcement. And what we want to do now is just go over the chart. I'll put a screenshot of the profits somewhere on the chart so you guys can see it. Made a little bit over $6,600 on this trade today. We're trading AUD CAD. And I want to explain why it is that we got into this market right down here. We got a crazy sniper entry on the buy. Price shot all the way up. Now, we didn't hold this all the way through, but at the end of the day, profits are profits. 6,600 for the day. I'm not really complaining. I want to go through and explain this kind of in depth on what it is that I was seeing and the overall understanding of the market. One thing I want you guys to take away from this is a very, very, very bearish market, right? This was a huge bear market. And to be honest, there was really no retracements. There was small moves like this here, but there wasn't really any necessary retracements to the point where we could qualify them as retracements. Like this was a big move down. This was a shallow retracement. Yeah, there's these little moves, but these are like huge impulsive waves with not enough power to correct. We saw that this was the swing low that put in this swing high. We've seen price break down below that point. I started looking at AUD CAD as price was really over here. Some of my friends were in some trades that they had got stuck in, and they were asking for some advice. And they started asking for advice around this area on price. And around this area on price, I was just like, hey, when it comes down to it, price is starting to look like a schematic, right? For those of you that have ever studied Richard Wyckoff or Wyckoff schematics, there's different schematics that you can play. There's accumulation schematics, and then there's distribution, right? Accumulation schematics really just play off of the fact that, let's say price is going bearish. They've accumulated so many sell orders, and the market has become oversold. So now what they're doing is they're gathering sellers and buyers. They're shaking out the weak-handed traders before they move price in the correct direction. In the sense of supply and demand, and this little example that I have up on the screen, you don't got to live and die and swear by this. This isn't exactly how the market works, because if this is how the market works all day long, we would just see the charts doing this. But this is a good example of how price can be moving, come into an accumulation zone, and then expand to the upside, chop, get up to a distribution level, and then change directions as well. At the end of the day, basically, guys, this is a good example of how markets move and price variates, right? In regards to AUD CAD, when my friends started asking me for opinions, I started looking at price in this range right here. I don't even relatively think that this may have existed yet. But in regards to what we were looking at, I was saying that price very much so looked like this type of schematic, right? So just think with me here, and let's do this together. So my initial thoughts was we have a selling climax, we had a climax, we had a rally, automatic rally. I looked at this as the secondary test. I looked at this as either the spring or the ST, and then this was one more move down. So in regards to it, if it's 1, 2, 3, and then test, this is 1, 2, 3, and then test, right? I don't want to get into drawing out everything and labeling it all out, but in regards to it, what you got to factor in is seeing that the market is very oversold. It's very bearish. It's coming down to the end. This is what I like to call the shakeout. This shakes out all the weak-handed people that were trading it, and then it gets ready to start changing directions, right? In the sense of structure, what I want you guys to understand is we can go through and we can mark out all the highs and lows and blah, blah, blah. But what really matters is this low, and then I'd say this high and this high, because those are the highs that put in these lows. And what I want you to really factor in is to be very precise in your drawings. And the reason being is price even made one more leg down. Let's say this was our retracement, one more leg down, right? So we have a smaller time frame breaks the structure, starts giving you sign that it's bullish. These are going to be more type of aggressive entries that you'll be able to take. We got a fair value gap here to play off of. That's a little bit more aggressive. But then we start breaking structure up here. And this is where you're starting to get confirmation that, hey, this joint here is changing directions, right? Now, when it came down to it, because I understand the pattern and I understand what's going on, I was just following the market. I wasn't really trading this, but I was just watching this because my boys were in it. There's the low, here's a high, higher low, higher high, quick liquidity sweep, mitigation there, right? Price goes up, pushes higher. This is the highest high. This new higher high comes down, liquidity sweeps, makes a lower low, right? So technically in this leg of price, right, my thought process was, hey, we're bearish. The reason being is if we're bullish, it doesn't matter what it looks like. As long as we're holding up these strong lows, we should be good. We have a shift of direction. Price pulls back. From here, we should see price go lower. What ends up happening is price doesn't go lower. It's showing it's unwilling to go lower. What happens next is we see price come back up and spike above this previous high here. Now, what does that tell me? It tells me that price was bullish, 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 bullish. This was the higher high that made a lower low. It came in, made what we think is a lower high, but it's not a valid lower high because it didn't put in a lower low, right? It did not put in a lower low. So the thought process we have to have is, hey, this is the range in which we're trading, right? This is the high that put in this low. So when price goes back above this high, we're back to a bullish sentiment. We're back to a bullish narrative, right? So yesterday I peeped, I was watching this and I said, hey, this is the swing low, unwillingness that put in a new higher high. This higher high went up above all these previous highs, correct? So by doing so, what we've done is we've created a new range, right? So we're trading from said low to said high before any of this exists. And if you guys have been watching any of the content that we've been putting out, I really like taking trades that are in a deeper retracement area, right? I really taking these trades that are in a very, 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 let's say, deep extension off the fib, deep extensions off of, there we go. So price came down up into our area of interest. Our entry was roughly right around here, stops right here below the low of that candle. And then we targeted those highs. I had a TP a little bit higher. Today CPI came out, catching pips instantly, right? A little joke, but the CPI came out and it was very favorable in the direction of what we were trading. When CPI released, price was already roughly 10 pips in profit. And then when it came out, literally this thing just went straight to the moon. It came up to these highs. I was thinking, hey, maybe we get a fake out or a trap up in these levels. That didn't end up happening, and I ended up closing it. I was satisfied with the move. It was a fast move. With news, things can change drastically fast without any warning. I took it and we kept it moving. I wish I would have kept a little partial in because this would have swung a little bit more, but we were able to capitalize at least 60 plus pips out of this position. Left about 60 on the table, but it is all good because that is trading, and trading is all about probabilities and risk. The best position to be in is absolutely no position. So at the end of the day, small trade, 6,600 for the day. We're going to be consistently scaling it and showing you guys how we can go from these small $1,000 days, $2,000 days, 5K days, 6K days to start pushing 10, 20, 50, 70, 100K days, right? It's all about just getting in tune. So with that being said, family, I hope you guys liked the video. Comment, subscribe. Let me know your thoughts on this AUD CAD setup. Let me know if you're enjoying these quick breakdowns of the daily profits that we've been having. And I'll talk to you guys soon. Take it easy.